Hi, I'm Garth from traderscorner.co.za. This week, I'm taking a look at 4 ETFs, exchange traded funds, that have caught my eye. Each weekend, I have a look at a basket of ETFs, and this week, I've come up with 4 that appear to be amongst the strongest in the universe of ETFs that I follow. So let's take a look at each of them individually. We start with a look at the iShares North American Tech Software ETF. That's the IGV is the code for this one. What's interesting here is that this ETF really is very strong. It's probably the strongest of the 4 that we'll look at today on a relative basis. What you can see there is that this ETF broke out in early June above $370 per share, which is a pretty bullish break above a triangle pattern that had formed over the previous few months. It is now trading at a new all-time high and remains pretty strong with solid upward momentum. It is overbought, it is quite stretched, but having said that, I think if you're a short-term trader and you drill down into the shorter-term time frames, you probably can still find some nice trading opportunities on the long side here, as long as it's trading above that rising trend that I've indicated with the black line there, and as long as it's trading above the 15-day exponential moving average, then I think you want to still be buying the dips in this one. Then the next one that we're taking a look at has been widely published on Twitter and in various other financial publications. It's SMH, that's the VanEck Vectors Semiconductor ETF. And the reason it's caught a lot of media attention recently is because of the bullish breakout through the top of that ascending triangle pattern that you can see on the chart over there. So the break above $255, which occurred last week, that was a bullish breakout. And if that bullish break can be sustained, then it suggests that there's potential for further upside here. So the key is going to be to watch that $255 area. That now will act as support into any dip. And as long as it can hold that $255 support level, then I think there's a strong argument to be made here for buying this one for further upside. And that triangle pattern, that ascending triangle pattern that I have pointed out on the chart there, actually points quite a lot higher. You can probably project about a 10% move to the upside based on that triangle structure. Then the next one is the Russell 2000 ETF. That's IWM, very well-known exchange traded fund, which represents the Russell 2000. And here what we're looking at is the overhead resistance at about $233 per share. We'd need to see this ETF break out above that $233 level in order to open further gains. So keep an eye on that. It does appear as if it's bumping up against that resistance. And the way I often think about it is that as the stock bumps up against the level time and time again, eventually it does tend to break through that resistance. So I think it's going to be key to watch for a possible breakout above that $233 resistance in the week or in the weeks ahead. Then the last one I'm taking a look at here is the XLE, that's the Energy Select ETF. And you can see a clear rising trend over there. It is above the 50-day moving average and above the 15-day exponential moving average as well. There's been some consolidation here over the last month or so, but it does appear as if it's potentially looking to try and break out through the top of that consolidation pattern. We'd need to see a break above $55 here to mark a breakout above the top of that consolidation, and that would then be bullish for further potential gains. But certainly on an absolute and a relative basis, this ETF is still fairly strong, and that upward trend is undeniable. So that's it. 4 ETFs for you to keep an eye on in the week ahead. All of them relatively strong, some looking for potential breakouts, some have already broken out. That's all I've got for this week. I'll be back again next week with some more market analysis for you.